All right, everyone, I want to share a stock with you and a specific plan for it. So this is going to be on OMF. I'm going to tell you two things: why I like it, and number two, how to trade it using a technical system. All right, so it's a combination of fundamentals, what's going on with the actual asset, the stock, the company, the business, the market, and proof that this symbol is a good candidate for trading then with a technical approach. All right, very important, because then if we're wrong on the fundamentals, we can be out due to technicals. And if we're right on the fundamentals and we have a good technical approach, then we can ride the upside. All right, very important, valuable approach. Please read this carefully if you've not seen it before. It's not specific advice to you. All trading carries risk. You should speak to your financial advisor. All right, so why I like it. We have a over 5% dividend, which is a sign of a good health. That's in a very, very low interest rate environment to have something. And we look at all the technicals in here, and there's some very high returns from trading in this stock. But on top of that, to help smooth out the returns even more, you may own it. If you're owning for trends, you're owning for long-term momentum, you may also own it through dividend payments. So that would further improve your yield beyond even what I'm going to show you from purely the stock appreciation and trading. The company itself has strong profits, much stronger than other areas of the market. If you just filter through, and this is how I come up with these things, I filter many, many times. I'm always looking for good things to be in and follow, especially not micro caps, but smaller cap stocks that big institutions are not heavily participating in. And I'm looking for good, solid companies. All right. So this company has strong profits, strong dividend. It's going to make it attractive to more and more people. And it has low implied volatility. This goes outside the fundamentals, but still checks off all the boxes for something that tends to do well moving forward. So on top of the fact it's doing well, the price is doing well, the profits are doing well, the dividend's doing well, the options market tied to this has low implied volatility, and that means there's very little fear. I know I said no fear. Of course, there's always fear and risk, but there's essentially, we're at the bottom decile, the very lowest end of implied volatility, which means there aren't big bets against it from hedging or counter trend or people who believe there's a fundamental flaw in this company. So that's a great sign. Low implied volatility is a great sign for future growth. Just one sign, but on top of good price improvement, dividends, profits, etc. All right, it trades well. I'm going to show you that in a minute. What's important about that? Well, something that moves, has strong movement. When the market's doing well, it really surges ahead. But at the same time, when the market's doing poorly, it can drop even more. But if we have a good system to follow those moves, we can capitalize and take in large gains. I'm going to show you a strategy that when it's gone for years with no major breakouts, no major improvement in its price, it's gone for years that way. But all of this big trends up and down has created awesome opportunities to follow the momentum from the lower end to the upper end. If you choose to go on the short end, you could have done that too and also done well. I'm only going to show you the long end. All right. It's currently above a $50 price point. That's also very valuable because slippage risk is one of those hidden factors that people find kind of boring to talk about, but is a huge issue. And I see it all the time, people trading stocks that are $2 or $8 or 50 cents. And they're just buying more shares than they would buy if it was just an expensive stock, and they think it feels cheap and they can imagine it going up to 30, 80, 50, $500 or whatever. But the problem is you just get chewed up to pieces with the slippage. You pay 1 cent more on a 50-cent stock. That's a 2% cost of trade. Then when you sell and you have to sell for a penny less, that's another that's 4% round trip cost. That's enormous. Okay, that really eats away. But when you can get up to $50 instead of 50 cents, now slippage just barely impacts you at all. All right. It's a boring business. It's a finance company. They lend money, but it's the most classic business of all time. All right. Lending money, loans. And by the way, it's a great business. It's a real business. Look them up. They've got brick and mortar locations. They have an awesome website. Great user experience. It's a modern, company, providing a very real and necessary business, and I like everything about the way it is. I'm not going to get into so much about selling this company because this is just one of hundreds of opportunities out there, and this is not about getting you all excited about OMF. It's all about showing you the process of finding something like OMF and then finding a good system to trade with it and how to put that together along with other 14 names, 30 names, 40, 50 names, all right? Currently, I'm at 50 names and I'm looking to get to 100, all right? And forget what everybody else says about focusing and diversification. At the heart of it, when it comes down to at the end of the day, people are more diversified than they will tell you. And that's a story for another day. I'm not even going to get too far off on that. Anyways, recent breakout. I'll show you in the chart here in a second. But it's not too far above that long-term breakout. So it has a nice breakout. It's had some very strong price movement lately, but it's not like way above where it's been before. It's not like surging way outside like you're seeing a lot of the stocks where it's just, you look at it and say, you just feel left in the dust, right? All right, so let's take a look at these. I'm going to look at the chart here with you first and then come back to show another plan here. All right, so this is OMF. And this is, I'm just going to kind of go back to the beginning. So this is back when it has a lower price, but that's fine. And this is the stacked RSI on here. I have the equity curve indicator on here, which you can get from Edge Navigator for free. So this shows you the returns from all these trades. So all the trades are up here. So there's the buy here, and then selling out 1, 2, 3 of those, and then a re-entry here and selling out, a whipsaw there, a nice big run up there, and then here you see nothing in there because we're flat. Okay, you see no change in P&L because we're flat. All right, so we're following momentum, we're managing our position with multiple exits, and when it's tanking, we are on the sidelines or in something else that's not tanking. All right, and that's back in 2016. You can see that this whole period here, all the way through here, the stock is back at 15 and not going anywhere. But where are we? We're still sitting on the original profits from the strategy. Sorry, I just zoomed way out and kind of messed up your view here. So all that gains that ran you up to 45, when it runs all the way back down to 9 again, our P&L is still up here. Okay, and we're trying to recapture, we're trying to ride that. We're getting a little whipsaw, it's kind of churning us a little bit and we're losing. But what I'm looking at now is this new fresh breakout taking us to all-time highs on top of good dividend, strong profit, and the expectation of the stock market to continue doing well in an inflationary environment. So moving forward, you can see that it's done well here. We have another example. Let me go back to the end. Sorry, I'm probably making you dizzy. All right, so back at the end here, let me zoom out just again. This is the pandemic sell-off. We're flat during all that, so we're taking trades on the upside all the way up, and then we're here, we're flat all the way down, and then we're re-entering down here, and we're riding it all the way back up. All right, so now we're into this, where it previously, and this is what I like to see too, it had prior to the pandemic been growing nicely, got really beat down hard, has definitely recovered, but it hasn't like blown ahead like a lot of other names. But it's got such strong fundamentals. It's got good trading behind it. It's a small cap stock, so there's not a tremendous amount of institutional money into this. I almost said the word yet, but I don't want to predict the future, try to claim that I know what the big institutions are going to do. But everything about this I like. Hey, and here's what I like the most. If this bad boy is going to go down to 10 again and sit there for the next 5 years, it'll be a ride like this. I'll be on the side. I won't even know about it. You want to know my opinion? I won't even know that happened. I just won't have a position. And maybe someday I'll be looking back and say, oh, yeah, I got OMF on my list here. I got OMF, haven't been traded by my automated systems. But there's no position. Nothing's going on there. What's going on? Oh, look at that. Man, it used to be up to 50, 70, 80, who knows? And it's all the way back down at 10, but I was out. Okay, love that. So, back to what to do with this. What to do with this. How to trade it. You got 3 options from what I see. You got more options. You got all sorts of options, but 3 basic approaches that I would take. Number 1 is invest. If you like the fundamentals, you like the business, go do your own research on this company. You may even find they have a branch in your area. You've never heard of this company, and they got an office next to you. I found that out for myself. Didn't know that. Never heard of them. I look them up on Google Maps, and there they are. Drive by, and there they are. Nice operating business. Like, okay, I didn't know this company existed. So you can invest in them. Number two, medium-term moving averages. Very common way to just filter out a really bad downside, but enjoy the appreciation. One downside to that approach is while it's easier to trade manually, that's what's easy about it, you are going to give back more. So if it really runs up far away from the moving average, when it rolls over, you can have a big give back before you finally get out. And that's a hard trade to execute. When you see a big give back and then you got to take it off, that's hard to do manually. It's one of the reasons I choose not to do that. And number three, it's one I recommend, one I just showed you, is called the Stacked RSI if you've not heard about that. And the Stacked RSI is a free strategy that I love to teach people because it's very, very effective and works in many, many different types of markets, especially what we call high beta stocks. Those are stocks that tend to move further and faster than the broad market. So if the market's up 5% over one period of time, a high beta stock would be something that's moving up 10, 15, 20% or more. But at the same time, when it's dropping, the stock market's dropping 5, 10, 20%, a high beta stock could drop 20, 30, 50%. So we use momentum strategies like the Stacked RSI to capitalize on the big runs and step aside during the big drops. So if you're interested in that, you can go learn the Stacked RSI. Like I said, you can learn the rules about it. You can see all about it absolutely for free at edgenavigator.com/stackedrsi. And then if you choose after that, you can go trade it manually yourself, or there are options for you to use our automated programs, automated systems to get that, and comes with training, the license for the strategy, and you're able to automate that yourself on any stock that you want, including OMF or others. All right, so go ahead and check that out. I'd love to get your feedback on this and your opinion on OMF, any research that you've done, any thoughts you have, or if you have another symbol that you would like me to check out, feel free to share that too. All right, so thanks for checking this out. Now go check out the Stacked RSI. Talk to you later.